Property Tax Advisory Commission, please come to order. I'd like to welcome all of those in the audience, commissioners and staff. Thank you for putting together this very ambitious agenda today. Persons wishing to present oral testimony, if you have not already submitted your registration form to any commission aide, please do so now. Otherwise, please raise your hand to indicate your desire to speak at the time I call for additional speakers, following the testimonies of registered speakers. Each speaker is limited to a 3-minute presentation on all items. Each speaker may testify for him, herself, and may not speak on another's behalf. Written testimonies, including the testifier's address, email address, and phone number, may be posted by the city clerk and available to the public on the city's DocuShare website. As a courtesy, please put all your cell phones on vibrate mode or turn them off during the meeting. Thank you. Our commission is being recorded in an audio-only format to increase the accuracy of the digital minutes. I request that commissioners and testifiers identify themselves before speaking. Thank you. Now, before we go on to the testimonies, we had requested a representative of the Mayor's Office, Real Property Assessment Division, or Department of Fiscal Services to send a representative over to answer questions that we were interested in receiving answers for. And at this point, I ask if anyone here is present from the Mayor's Office. We'll take that person out of order for questions and answers. Okay, seeing nobody, we'll move on to testimonies at this time. The Commission will now take testimony on all the items on the agenda. We will call on testifiers in the order in which your name was submitted. If you have not yet signed up, please do so now. Sign-up forms are on the table as you entered. When your name is called, please approach the testifier's table, state your name and the item on which you are testifying, and whether you support, oppose, or have comments on the measure. You will have 3 minutes in which to speak. Your cooperation will be greatly appreciated by all so that everyone will have a fair chance to testify. Our first speaker is Reb Bellinger. Mr. Bellinger, please come forward.
Thank you very much. Thank you, members. And thank you for volunteering your time for an unenviable position of having to be an advisory group for the real estate tax issues. I can appreciate the challenges it must be. The whole purpose of this measure is to try and put some incentives in place so that building owners can be motivated to help sign up so their buildings can utilize seawater air conditioning as an alternate option to provide large-scale air conditioning for buildings. Hawaii has a number of excellent locations. On Oahu, we have 3. The one that is most advanced is the Honolulu Seawater Air Conditioning Group, which is focused on the downtown project. It's quite well advanced. Engineering and design work has been done. Prior to my being with Deep Ocean Ventures, I was one of the senior partners at Mackay Ocean Engineering, where we did all of the offshore design work for all the big pipelines for the state at NELH and as well as for this project. And we've been involved with large projects like this in a number of places around the world. But they're complicated projects. The downtown project is one that could be a $400 million project. So think of it like a big capital improvement project that the city or the state doesn't have to fund. So what can be done to try to encourage building owners to sign up? When you have projects of this nature, you're kind of like a chicken and an egg thing. You have credible developers with experience and finance capabilities, but at the same time, before you can commit large amounts of funds, you want to be able to show that there is a certain percentage of customers already signed up, so that when you do your cash flow projections, everything, they look good and they make sense. So this effort is designed is to give another good reason for a building owner to say, not only is it beneficial for us as a building owner, it's consistent with the long-term energy plans of the city and the state, and the tremendous environmental benefits. In my testimony, I added a second sheet which just went into the different the benefits and all. Now, I realize that any time that you're looking at impacting the revenues of the city's administration will rightfully say, well, wait a minute, I don't care what it is, but it impacts our cash flows. And this is one of these things where it's a longer term look and more of a vision. The measure calls for like a 3-year tax incentive, but everything wouldn't happen in just the first 3 years. You have to first of all get a minimum sign up of customers in order to even start the project. So let's assume that you get whatever that minimum number is, say 70% to create a number. Well, by the time the project is built and operational, you're looking at least another 3 years down the line. So you're looking at maybe 2023. And then let's say that you had 70%. Okay, so that 70% goes for 3 years, but then let's say another 10% the following year. So it gets staggered and pushed out over time. So the overall revenue impacts really could be 8 years, could be 9 years. I just couldn't tell you exactly how many. It just would depend upon how the signups and stuff goes. It's a project that's focused strictly in the downtown. It has limited size. The state has already signed up a number of their buildings. There's discussions with the city to sign up theirs. And so this simply becomes a vehicle, not just for this project, but I know that there's interest in looking at a project in Waikiki. The areas out, the offshore areas off Ko'olina are very, very attractive for these kinds of projects. In the event that the project doesn't happen, well, obviously there's no impact. There's no impact. So I would request a favorable consideration of the committee, and we'd be happy to answer any questions. And if I don't know the answer, I won't hesitate to tell you I don't know.
Yeah, thank you, Mr. Bellinger. Commissioners, any questions for the testifier?
I have a question. Mr. Bellinger, this is Amy Hirano. Are there many businesses or buildings that have already signed up?
Yes. Besides the state buildings, Queens Hospital has, I believe the Central Pacific Bank building has. So there's a number of the downtown businesses that have.
Oh, they have.
I do not have a list of those. I mean, I'm not involved with the marketing and the customer sign up on this. So, I mean, HWAC would have a list of all of the clients that they have got current contracts with, as well as the what the governmental buildings are. I mean, even the federal building I know is on their list of commitments. So,
Thank you.
Any other questions, commissioners? Yeah, thank you, Mr.
Okay,
Bellinger.
thank you very
Appreciate
much.
your testimony. The next testifier is Dennis Tanimoto. Please state your name and offer your testimony.
Thank you, Mr. Chairman, members of the Commission. I'm Dennis Tanimoto, representing Hawaii Credit Union League, which is a trade association for the credit unions of Hawaii. My testimony was submitted in writing, and I just wanted to re-emphasize that credit unions are financial cooperatives that are owned by their member depositors, meaning that we don't have a separate group of stockholders that for-profit institutions do. So a tax on credit unions is actually a tax on its individual members. We are different from for-profit institutions in that we are fundamentally different in terms of structure, in terms of purpose, and in terms of public benefit. The differences in the structure and ownership really signify that we should keep our tax exempt status intact. And just to let it be known, I didn't include in my written testimony, but in 2015, the tax on credit unions was more than tripled by the city council. So we ask for your assistance in keeping it intact as it is now.
Thank you, Mr. Tanimoto. Commissioners, any questions for the testifier? Yes.
Thank you, Natalie Wassa. I'm just wondering if you know how many of your member credit unions have members that are considered low income?
We don't have any statistic to that extent, but I would say all of them have members that are low income, and many of them have members that have been low income but have, shall we say, graduated to moderate income. And let me give you an example of that. One of our credit unions financed or has as a member a person that was a flight attendant on Aloha Airlines. And as time went on, she looked at the pilots and she said, I think I could do that. So she went to flight school financed by the credit union, and she eventually got her pilot's license and got the hours necessary to become a commercial pilot. But the fact is that, she started off as a flight attendant and graduated to a commercial pilot and is now a captain with Hawaiian Airlines. I don't think we should tell her, congratulations, you've graduated to a bank, just because the credit union helped her become someone that is no longer low income.
Thank you. Chair, may I have a follow-up question?
Yes, please.
Or actually, another question. So I understand that there's a national organization that all the credit unions have to report to. Do you know offhand what that
Yes, it's the
organization is?
National Credit Union Administration, NCUA.
NCUA. Okay, thank you.
Commissioners?
Great. I have a question.
Yes, Commissioner.
Earl Menti, Mr. Tanimoto, thanks for testifying. I wanted to ask you, are there any services that you provide that your members will not be able to qualify for or get at a bank, a for-profit bank?
There are several, actually. A bank can really, let me back up and say that I was, prior to coming to the Hawaii Credit Union League, in banking for 19 years. So, I've seen both sides of the equation. And banks can literally serve anybody coming off of the street, whether or not they live in Hawaii or live somewhere else. Credit unions have a field of membership that's defined as far as community or occupational or associational fields of membership, and they can only serve their members. So one has to be eligible for membership and be able to qualify for membership, and once they are a member, only then can they borrow or do other things. As far as banks are concerned, you don't have to have an account with the bank in order to borrow from that bank. You can have really unlimited amounts of commercial loans. Credit unions are limited to 12.25% of their total assets can be in commercial loans. Trust services are not allowed in credit unions. They are in banks. The list goes on, but those are the ones that immediately come to mind.
All right, Mr. Tanimoto, I understand there's limitations for credit unions, banks. What I was getting at is, are you servicing people that the banks would not service, would deny services to?
I'm not sure, because having been in the banking side, we did have, high-income individuals as well as low-income individuals. So I cannot think of anybody that the banks could serve that a credit union, or that the banks couldn't serve that a credit union would. I do know from anecdotal stories of credit unions that have helped members that couldn't qualify for loans at other financial institutions. But that's only anecdotal. I don't have any hard evidence of that.
Okay, thank you.
Thank you.
Mr. Chairman,
Commissioner?
this is Scott Higashi. Mr. Tanimoto, thank you for coming to testify. One question. It seems like I don't know how these things work. It seems like over the years there's been more liberalization, if you will, on how you can become a credit union member. Is that true? So suppose, for example, if you're a resident of Oahu, can you join a credit union now? And if for that particular credit union, is that one of the criteria?
Some of the credit unions have what is called a community field of membership. Community meaning that you live or work in that particular well-defined area. The NCUA, who I mentioned earlier, the National Credit Union Administration, has what they call a presumptive community. And that presumptive community can include up to a county. So anybody that lives in the city and county of Honolulu, meaning all of Oahu, would be eligible to join. Similarly, if you live in the county of Maui or the Hawaii County or Kauai County, you're eligible to join certain credit unions that have that type of field of membership.
So in other words, even though the credit union requires membership, the availability of membership is not necessarily as restrictive as one might think. You could live in the city, anywhere in the city and county of Honolulu and find a credit union you could join.
Not any credit union.
A particular credit union that has that.
That is correct.
Ability. Okay. Now how have you seen membership grow over the last, say, 5 or 10 years?
I don't have that information right at hand, but as mentioned in my written testimony, the total membership in Hawaii right now exceeds 484,000 members. And if you look at it from the standpoint of relative to our population of 1.4 million, that works out about roughly 60%.
Do you know if a lot of credit union members are also account holders at banks?
No, definitely.
Yeah.
Yeah. We did some surveys about 5 or 6 years ago. It showed almost all of them have banking relationships as well.
And one last question. How much owned real estate do credit unions have?
You're talking about Oreo?
Just, their own branches own
I don't
own
have,
and fee.
Yeah, I don't have that.
Because really the provision that we're talking about is the taxation of a property that's owned by the credit
Understand.
union, right?
Right, yeah, I don't have that information at hand.
Sure.
I'm sure the city does, so. But I thought you meant the other real estate
No.
owned, which is foreclosed properties.
No. I'm talking about what the credit unions actually own.
Got it.
Okay, thank you.
Any other questions, Commissioner?
I have one question.
Sure.
What currently do you pay in real property tax?
$1,000 is the maximum.
Yes.
It used to be 300
Yes,
prior
thank you.
to the 2015 legislation.
Thank you. Yes, Commissioner?
One more question, Natalie Wassa. I was just noticing in your testimony, you state that you're testifying on behalf of 30 credit unions, and according to the information the city gave to us for fiscal year 2018, 76 credit unions received exemption. So I had always thought that it was kind of like a mandatory thing, or that most credit unions would join your association. So it's not mandatory and they just join if they want to, or how does that work?
It's voluntary, first of all. We only have one credit union in Hawaii that's not a member of the league. But I think that 70, what did you say? 70?
Oh, you know what? That's probably multiple branches.
Yeah.
Yeah, okay.
Because, there's only 52 right now statewide.
Okay, thank you.
Any other questions, Commissioners? Thank you, Mr. Tanimura.
Thank you.
The next testifier is Andrew Rosen. Please state your name and offer your testimony.
Thank you. My name is Andrew Rosen. I'm President and CEO of Hawaii State Federal Credit Union. I also serve on the board of the Hawaii Credit Union League. Thank you, first of all, for your time and serving on the commission. As the president and CEO of Hawaii State Federal Credit Union, I represent 111,000 members statewide. Most of them are on Oahu in the city and county of Honolulu. Serving on the board of the Hawaii Credit Union League, Mr. Tanimoto and I represent 53 credit unions in Hawaii. When I joined Hawaii State Federal Credit Union 8 years ago, there were actually nearly 100 credit unions in Hawaii. And the fact that we've seen so much consolidation in the industry is partly because of the recession we had in 2008, but also because it's a really competitive business. The costs to stay in business are increasing dramatically. And so the real property tax exemption does have a significant impact on the credit unions in Hawaii and in Honolulu. There was a recent study that was done by Aloha United Way called the ALICE Index. ALICE stands for Asset Limited, Income Constrained, and Employed. And it shows that nearly 50% of households in Hawaii are living paycheck to paycheck. Credit unions serve a critical public service in helping to provide financial services to people in Hawaii. Many of them are income constrained and living paycheck to paycheck. Credit unions, because we are owned by our members and not shareholders, any profit that we make gets either reinvested in the credit union, it goes to our capital reserves, which we're required to keep in order to protect the credit union and our assets against any loan losses, or it goes back to members in the form of lower rates on loans, lower fees, or higher rates on deposit accounts. And a perfect example of that is this year, Hawaii State, all of us know that typical savings accounts are paying very, very low interest today. Not really enough for anyone who needs to live on that as a form of income. So this year, Hawaii State decided we were going to give back to our members in the form of better rates on savings accounts. And so we increased the rates on all of our savings accounts, and including one account that pays 1.5%. So what we're doing in doing that is saying, we've done well financially, we've been able to make a profit over the last few years, and we wanted to return that profit to people in Hawaii. And we're doing that through the interest rates on our savings accounts. So this year alone, we've given an additional $5 million back to our members through those interest rates. In addition to that, I know there was a question earlier about are we providing services that the banks do not? And we know for a fact that our underwriting standards on our loans are much more liberal than those of the banks. I've worked for both Bank of Hawaii and Central Pacific Bank. And I can tell you for sure that we are giving loans to people in Hawaii who would not qualify for loans at any of the local banks. In addition, having set the rates on deposit accounts at Bank of Hawaii, I know that Bank of Hawaii and the other local banks look at what the credit unions are paying on their deposit accounts when they set their rates. So the credit unions provide a safeguard and make sure that the banks are not operating in an oligopoly environment. In addition, the past few years, our credit union has been able to generate income. Again, that income goes to our reserves, which we're required by our federal regulators to keep certain reserves. But it also gets reinvested in the credit union. It allows us to open more branches to provide more convenience for our members. But because we are in a very low rate environment and the Federal Reserve is actually lowering rates, we're in the process of doing our budget for next year. And even though we've made some profit this year, next year we're going to struggle to break even. We're one of the largest credit unions in Hawaii, and we're struggling just to break even. So any changes to the real property tax exemption would have a significant impact on us, our bottom line. And really, any tax that we have to pay on real property will come directly out of the pockets of our members. It means we'll just have to lower the savings rates. So that's less money going back to our members. Thank you.
Thank you, Mr. Rosen. Commissioners, any questions of the testifier?
I do.
Thank you, Commissioner.
Amy Hirano, can I join your credit union?
Yes. Well, there's different ways that you can join.
Yeah, I can just apply for membership.
Our core membership are state employees, but about 20 years ago, we also got permission to add city and county employees.
No, but you said anyone. I mean, can anybody off the street can go to you and can I just, I'm not a city employee, I'm not a state employee, can I be a credit member in your credit union?
In addition to state employees, city and county, we can add certain businesses or associations to our field of membership. For example, members of HGEA and members of certain nonprofits can also join the credit union.
So it's fairly restricted then?
There are about 300 different organizations that if you're an employee or a member or a family member of anyone who qualifies, you can join.
Thank you.
Thank you, Commissioner. Yes.
Scott Higashi. Thanks, Andrew, for coming. On the decisions to return benefits to members, and I'm a member of a credit union, so I can appreciate that. But those are business decisions, right? You're making in light of the competitive landscape. So you guys also must look at other credit unions and say, well, this is what they're paying. We're going to make a decision to be competitive for our members, including rates you pay on savings, but also rates you charge on loans.
Right,
Okay.
exactly.
So that is really up to the credit union to set based on your financial picture, because it's nothing really, the members don't necessarily vote and say, you know, you got to change this, you got to make it higher. You guys make a decision based on the executive leadership of the institution.
Right, it's made, those decisions are made by the management of the credit union. But again, the difference between the credit union model and the bank model is the bank needs to generate a return for shareholders. The credit union, the shareholders are the members. They own the credit union. So all of that money either gets reinvested in the credit union or goes back to them directly.
Sure.
So it's a very different model.
Right.
Chair?
Yes.
Mr. Rosen, I wanted to find out how many properties actually does your specific federal credit union actually own? I'm assuming you lease some instead of own, right?
Yeah, we now have 10 branches, and all of the branches, except for our main headquarters, are leased. The properties that we own are our two headquarters building, our back office buildings on Haleakawila Street, and an adjacent parking lot. The credit union, our regulator prohibits us from owning investment property. We can only own property that we're using for credit union purposes.
Right, so just those two properties would be affected that pay property tax
Yes,
out of the 10 branches then?
yes,
Yeah,
exactly.
thank you.
Thank you, Commissioner. Any other commissioners?
Yeah, I have
Yes.
another question. Amy Hirano. When you, as a credit union, if you then buy a property that had a commercial business on it, and you then move your headquarters or your operation to that particular site, you've taken down a commercial real property tax system for us, for the city, and you then pay only $1,000 real property tax. Is that correct?
Yes, that's correct.
Thank you.
Thank you, Commissioner. Any other questions, commissioners? If none, thank you, Mr. Rosen.
Thank you.
Are there any other testifiers in the audience today? Yes. Please state your name and offer your testimony.
Good afternoon, Commissioners. Nathaniel Kinney from the Hawaii Construction Alliance. The Hawaii Construction Alliance is a 501c5 organization. It's a large organization. It has one employee, me, and very influential. But we're a small organization that is a 501c5, but we also represent other 501c5 organizations: the Carpenters Union, the Laborers Union, the Operating Engineers, the Bricklayers, and the Masons Union. And I only heard about this recently. I didn't eat lunch. I rushed here. I didn't even pay my parking meter, so hopefully I don't have a ticket. But I'm a little disturbed at defining charitable organizations as those only 501c3 and then all other nonprofit organizations, and then increasing the minimum tax. So, like I don't like this idea of distinguishing 501c3 just because they're quote-unquote charitable institutions versus some of the other institutions like 501c5 labor organizations that play a vital role in maintaining working conditions. And basically, when you look at our members, they're Hawaii's middle class. Like, I mean, not like the high end of the middle class. We're talking about blue collar construction workers and their families. We have regular members. You cannot walk in off the street and just join our union. You have to pass several different tests, a drug test, as well as physical and agility tests. And raising any of the costs on these unions comes directly out of working class people's paychecks. And so, you know, that's just one side of it. The other side of it is I think the labor unions do a terrible job of marketing how much money they give out in charitable donations to. I would give a very conservative estimate just in the alliance, like close to $1 million a year, maybe. And I'm talking, that's just 5 unions, 5 construction labor unions. Like you have larger unions like HGA, UPW, and the other building and construction trade unions, the subcontractor unions, and these they regularly give to, I mean, as you know, a member in their baseball team, to the Bishop Museum, to, I mean, I easily hundreds of thousands of dollars, and I understand that, you know, we're the big bad unions and that, you know, we could pay, but we really can't. We're also looking at a recession coming up, and the dues that pay construction unions are basically all of the money that is like held in reserve by construction unions is made off of what they call working dues. So when the members are working, we collect dues. When the members aren't working, we don't collect dues. So I just, you know, wanted to make sure that we don't lump all these other nonprofits as, oh, well, they're not charitable organizations, so they don't really do anything. And second, you know, just kind of emphasize the amount of donations that we give to other nonprofits to help and make sure that we keep Hawaii, and, you know, we're all in it together. And so that's just, I'm sorry, I wish I prepared written testimony, but I literally just heard about this today. So, thank you.
Commissioners, any questions of the testifier? Yes?
Thank you, Natalie Iwasa. Thank you for coming. I'm glad you heard and were able to make it.
Yes, I think I do have a parking ticket, though.
Well, sorry about that. I'm just wondering if you can tell us approximately how much of your time you spend lobbying.
I mean, lately, a little bit. I don't know if it'd call it lobbying. I'd spend most of my time waiting because I guess the agendas are so long, and then when you're not there, then you miss it. So actual lobbying, very small. Like actually talking to legislators or actually talking to council members, but I don't know, like for some reason, like there was one thing that I needed to testify on yesterday. It was the Kyoya development, and that didn't get heard until 4 o'clock. And so that doesn't mean I get to go home and go to sleep. I had to do all the rest of the work that I had to have done during the day. So I just wish it could be a little bit easier to, well, I mean, I just wish the politicians would talk less, but that's just me.
I have a follow-up question.
Yes, Commissioner.
So I'm really familiar with 501c3s, not so much with 501c5s. Do you have to report on your 990 lobbying expenditures?
I believe we do,
And
yes.
do you recall offhand what percentage then of your expenditures are for lobbying?
I think it's, I like allocate hours, and I'm not certain right now, but I just take a percentage of the time that I spend, and then I allocate my wages per hour and then do it that way.
Okay, your 990 is available online, so we could take a look at that, correct?
Sure. You wouldn't be the only one that looked at it. Go ahead.
I'm just curious. I would like to follow up on that then. Thank you.
Thank you. Commissioner, any other questions from the commissioners? Yes.
I'd just like to make a statement. Commissioner Joy Kimura speaking. I just want to state that I don't understand or see what the correlation is between political activities and real property tax. I don't think that a real property tax commission is the correct forum to bring up opposition to political activities by organizations that are not 501c3s.
That is a good point.
Any other questions by the commissioners?
Oh, thank you so
Thank
much.
you, Mr. Kinney. Appreciate, Mr. Higashi will take care of your parking ticket if there's a problem.
Thank you.
Any other testifiers in the audience today? Okay.
Done.
Well, Mr. Kinney didn't have to wait for that too long. Okay, so let me wait for Randall.
No one's coming from the city.
So nobody was out there. Okay. So we can just move to Okay. Since there are no other testifiers and we have yet to see a representative from the mayor's office, we'll move on to a new business now, to the committee meeting reports. At an earlier meeting, this commission formed 3 committees, one devoted to evaluation, one to classifications and rates, and one to credits and exemptions. The subcommittees were instructed to meet in between the commission's meetings, consider a set of ideas, and formulate recommendations. We will now have each committee chair present their report and discuss each topic in the report, and this is the time now for commissioners to express their views as well. So we'll start off with the evaluation committee. Commissioner Iwasa.
Thank you. So I did submit a written report a few days ago, and I think everybody has a copy. Basically, we all know that the council did allow us to look at valuation methodologies, which we attempted to do, and unfortunately were, for lack of a better word, stonewalled. And so our recommendations that we'll go over are basically to educate the taxpayers. But I also wanted to point out, I did a timeline, and I had looked back at the requests. Because we were told in this, in our committee and also at this commission, one of the prior meetings, that the city would not be responding to our questions or providing answers or providing documents that we requested. I did a Freedom of Information Act request. Actually, I did several. And 2 of them were denied, and one of them was supposed to be granted, except that they were going to charge fees. And so I had asked, well, first of all, let me back up. I had asked for a waiver in the public interest, and when I did that, I said that this is for the Oahu Real Property Tax Commission. I put that on the request. And I've called down there, I've spoken to the supervisor, and I was basically told that it had to be in the name of the commission. So I did that last night, and unfortunately I haven't heard back. I haven't gotten anything. But I find this whole process extremely frustrating, and I don't think it's fair to the taxpayers of Oahu not to understand how their properties are being valued. I don't think that anything that we requested is of such proprietary nature that it would jeopardize any kind of appeal that is in process now or that would come before the appeals board. So that's basically my report, and then we can go over the recommendations at that point in the agenda.
Thank you, Commissioner. Are there any questions from the commissioners at this point? Thank you very much. Moving on then, may I have the Classifications and Rates Committee report from Chair Kimura?
We met and we discussed Bill 55, and we're in support of taxing TVUs at a higher rate than what they currently pay.
Was there any consideration of the residential A issues? No. I'm just asking.
I wasn't on the committee, but
Okay.
I think we did discuss it to some degree because it was part of a bigger I'm sorry, this is Amy Hirano. We did discuss it in terms of a bigger picture, and I think we're just going to not touch it. We're going to go along with whatever the council at this point in time is going to do with it.
Thank you for that, Commissioner. Hearing no questions, then we'll move on to the Credits and Exemptions Committee. And may I have a report from Chair Panas?
Yes, thank you, Chair Matthew Panaz. The committee actually was unable to find a time to meet over the last couple of weeks, but we have been in discussions on several occasions for the agenda items that are on the list. That's the extent of it at
Yeah,
this point.
thank
Yep.
you, Commissioner. So now we'll move on to the committee recommendations. At the previous meeting of this commission, committees were asked to draft recommendations or come up with recommendations to the council in time for posting with the current meeting's agenda. So we'll begin with our discussions on recommendations of the valuations subcommittee, Evaluation Committee. We'll take up those recommendations one by one with the understanding that they may be revised and further clarified in the final report to be approved by the final meeting of this commission on November 21. So first for discussion and recommendation is the income methodology to value real property. Chair.
Okay, Natalie Uwasa. So we did discuss that, and basically, we didn't make any recommendation on that because our understanding is that the property owners would have to voluntarily, or they would be required to disclose their income in order to make that, the valuations work. And so we didn't make any recommendation on that type.
Mr. Chair?
Yes.
Scott Higashi, although we did get one piece of clarity from the administration that should a taxpayer want to use the income approach as part of their appeal package, they are welcome to do so, and it would be considered as part of evidence in the tax appeal. So that was made very clear on the record, and I think at the end of the day, while I agree with the chair that we could not recommend that the income approach be institutionalized at the city level, that doesn't mean that the income approach was dismissed as being an invalid method to appeal a valuation that a taxpayer might disagree with.
Would that also be part of your report?
We can make that part of our report.
Yes,
That's
Chair.
good.
Earl Menti, I'd like to expand on Commissioner Higashi's what he said. You know, the income method is a valid method, and for certain properties, commercial, multifamily, that's actually the preferred method. The breakdown in using that method is they need to get data to value and that was the difficult part, and that's what Commissioner Iwasa was saying, that it would be difficult to get like fair market lease rent for the office buildings in downtown, so you could figure out by income approach what the valuation would be. So in practicality, it would be difficult to implement, although theoretically it would be the preferred method of valuing a property.
Well, this is Ray Kamikawa. So what I'm hearing is that there may not be an objection to adopting this methodology formally if it were to be raised and offered by the taxpayer and be considered by the Real Property Assessment Division.
Yes, Scott Higashi. Yeah, that's my recollection of the testimony from the administration, that because it's a industry, from a practical perspective, as Commissioner Mente says, it's an acceptable means of valuation. They'll accept it as evidence, as a rebuttal, if you will, should a taxpayer be dissatisfied with the valuation and therefore their real property tax.
Commissioner, were you suggesting something more formal than that? Or-
Well, what I wanted to point out was that it would be good if we could use it if we had the data to actually implement it, but we don't. So in practicality, there's an issue in actually using it. but again, the methodology of using the income approach is actually a very good approach to valuing, like I said, certain types of properties, especially office buildings and multifamily commercial. But as was testified, it was very difficult to get information to find out, the market rents, for example. So it wouldn't, if you don't have good information going in, you're not going to get a good valuation. And we were looking to see if we could get accurate valuations. So the method would be good, but getting the data to implement it to get an accurate valuation may be difficult.
Okay, my understanding of the income approach is that it's not necessarily used for mass valuation. It's used for property by property, commercial application. So could it be used on a voluntary basis by a taxpayer and respected by the Real Property Assessment Division?
Yes, this is Commissioner Olmert again. Yeah, I specifically contacted John Child, the company John Child, who does a lot of non-residential valuations, individual. And then there is a distinct difference. When it's done in the private sector, they actually go out to gather the data for a specific property. Whereas in mass, you would have to get a lot of data from all over,
So that's, I guess the suggestion would be that we would formalize or institutionalize the division's testimony to the committee that they would consider the income methodology on a property by property basis.
Right, again, Earl Minter, yes, that'll be correct. That's, again, because the valuation method is preferred for certain types of property, that probably would be, to deny it would not be a good position to hold by the city. They should actually, and they do, so it would be very acceptable to use that method.
So can we institutionalize that?
Chair.
Yes.
I wish the city administration could be here because what I recall is that clearly they said that the income method could be used for appeals and that they would, accept that. And my understanding was that we didn't need to do anything for them to continue accepting that. But as far as then saying that they will go out and actually use it to value commercial properties, I didn't get that from them.
No,
It was
that's not the suggestion. The suggestion is if the taxpayer brings that up,
Right,
that the city would then be duty-bound to honor and consider that.
right, and they did say that.
No,
that they-
I'm saying institutionalize that by ordinance.
Okay, so my understanding is that they're already doing that. Okay, you just want to, okay, I got it.
Institutionalized by ordinance, right?
Okay.
It's a suggestion, that's all. Okay. So what will be the recommendation on this topic? Is the commission ready to vote on
Question.
the question?
Question again.
The question will be to adopt the income methodology if raised by the taxpayer on a property-by-property basis to be a valid methodology to be considered by the Real Property Assessment Division.
This is Scott Higashi. I'm confused. I mean, I think what you're saying is you're asking us to say by ordinance compel the Real Property Division to always consider proactively when a taxpayer brings it in advance of or in response to their assessment?
In response to their assessment.
So, okay, so it's so not in an appeal process, but merely in the discussion phase?
It could be in the discussion with the assessor if the taxpayer disagrees with the assessment, or it could be used for appeal purposes, but mostly for purposes of discussing the assessment with the real property assessors.
Okay. I mean, I think that's what they're doing now, but I don't know. I don't have any experience with that.
Any further discussion? Okay, so here we have Mr. Kurokawa, thank you. All right, we have Gary Kurokawa, Chief of Staff for the Mayor. Thank you for
I apologize for
appearing.
being late. And, Stephen Takara is out of town, right? So, I explained to him that I would be here to represent him to maybe answer some of the questions that you might have.
Please. Okay, so I'll open the floor to the commissioners who have questions for Mr. Kurokawa. Thank you for appearing, Mr.
You're
Kurokawa.
welcome.
We appreciate your time. Yes.
Chair, could we ask you exactly what we're talking about?
Did you hear some of that?
No, I didn't.
So we're hearing from the Evaluation Committee now, Chair Iwasa, on the income methodology issue. And we are told by the Real Property Assessment Division that the income methodology is going to be very difficult to implement on a mass valuation basis, just because of the practicalities involved in coming up with a valuation for those properties on a valuation basis to come up with an assessment. The suggestion was made that instead of doing that, to authorize the assessor to consider the income methodology on a property-by-property basis if the taxpayer objects to the assessment on a mass valuation or replacement cost new basis, and to have that as a recognized methodology by the taxpayer if the taxpayer raises that to contest the assessment, after the assessment comes out in December.
So it would be something like during the appeal process.
Doesn't have to be. It could be appeal process or even before the appeal process. We're trying to avoid taxpayers having to go to appeal. So perhaps, I know taxpayers and property owners always try to resolve things with the assessors. It could be within the appeal process because 30 days is kind of hard to speak
Right.
to the assessor. But I know a lot of matters get resolved during the appeal process. So sometimes, I'm told they cannot address the income method. Sometimes we're told we can. So the suggestion is to institutionalize that by ordinance in the valuation methodology provision, saying that, on a property-by-property basis, the income methodology may be considered by, it's an authorized methodology to be considered by the assessor.
So, going back, I know the income approach has, been discussed previously many times before. I think where, the limitations, right, for the office on the income approach is actually getting data, right? And we're talking about, the lease rents, right, and things that are used to do the income approach. Now, basically, we're not valuing the business, right? We're just doing real estate, right? So, we're looking for real property lease rents, right? We're not valuing a business, like say Ala Moana or, Brookfield or something, right? It's more on the actual physical real estate that what we're doing. But in that same vein, we would need data that a lot of companies don't want to provide. To us. Most of the places that do income approach, they have mandatory disclosures, right? Where, surveys are sent out and they send back the information to the assessor's office so that they can develop a model. Now, they're not doing individual, right? Anytime you do mass appraisal, it's done, with a model. And that data will be fed into a model to generate, valuation, and like they say, via the income approach, right? It's basically how the office would do them. It's not that they couldn't do it. I think the system today is set up to actually incorporate some of that. It's the data that, availability of data that is the limiting factor.
Yeah, so we're not talking about mass valuation. We're
Right.
talking about on a property-by-property basis.
Right.
If the taxpayer brings it up, the taxpayer will have the information to present to the assessor to contest the assessment made on replacement cost or comparables, right? The two
Right.
authorized
So,
methodology.
in that way, and I would have to defer to Cora about that because one of the first things that would, hit me is uniformity, right, on the application. Right now, the taxpayer cannot say, I want to do the cost, or I want to do the income, or I want to do the market, right? All that authority rests with the assessor, right? So he's looking at the most appropriate way to do the valuation. It seems like, that would make the taxpayer the person that would indicate which approach that he would like, right? And I would have to defer to Cora about that. And as far as equity, right? I mean, we're doing it in mass, and that would be something that would have to be looked at legal-wise, right? The uniformity and equity throughout the area. I mean, so if people choosing to use this, I mean, and you're gonna say that they will have, I guess, they would be driving what method would be used, right, at that point?
Not driving. They
I mean,
would-
but, if they
would be-
request it, then they have to do it that way, right?
They would be raising a methodology that the taxpayer feels is fairer than comparables and replacement costs.
Well, so,
In some situations, it may
and
be,
most,
right?
to be fair, I mean, when you look at commercial properties, income generating properties, of course, income approach is, one of the more valid approaches, right? The problem with that is, the data and the comparability of that, right? So now the office is gonna have to do an individual report, right, actually on the income approach on that property. Now, if any of you guys out in the private industry order one appraisal for an income property, it'll take you like 60 days, maybe 90 days, right, for one of the big firms to come back with the value. That time limitation is going to make it very difficult, right, for them to come up with a valuation of a single property. They're not going to be using that property's actual data. They're going to look at it, right? But does that represent the market is what they're going to determine. So they're still going to have to get rents, right? You see one of those commercial appraisal reports, they're not looking that at the property, right? They're looking at market sales and other things. I don't know if you're familiar with those appraisals that the firms do, right? That takes a while, that study, just to do one. So, I mean, I'm just saying that, that would be some of the limitations to that.
Okay, anyway,
Yeah.
all taxpayers have to wrestle with timing when they're
Right.
getting, appraisal reports of their own,
Okay.
right? Okay, commissioners, any other questions of, on this issue?
Yeah, this is Scott Higashi. So
Hi, Scott.
if someone brings in, they decide to spend the money, and for whatever reason, maybe they suspect that they will be dissatisfied with their valuation, right? So they start ordering these things well in advance, anticipating this, 3 months before the assessment comes out. Then they come in and they present you with a income approach appraisal prepared by a licensed appraiser. Will you accept that as evidence of on either pre-appeal or only during appeal?
I think during the appeal process, I don't think pre-appeal, right, because of the uniformity issue, right? But
Yeah.
if the property is challenged, I think, in courts or in the appeal process, I think that is one of the things that they would be looking at, right? Is if, and like any residential person, right? They did a mortgage that year, right? They're gonna bring in the report during that period, and that is, kind of looked at as evidence. I mean, of course, it's on an individual basis and not done by a model, but
Yeah.
it gives a good indication, right, of the subject's property's value. And, that is taken into account, I think, in that period. I think even on the income, if you have, so you did something before, and when you go to court or appeal process, the problem is, I think, you guys want to do it before the two avenues, and that, I think, the Corporation Council would need to look at, how that would be.
Yeah, because the suggestion then is the assessor is impaired by the fact that they don't have the opportunity to do an equal, independent valuation using the same methodology, and is not compelled to do so because it's not an appeal with evidence requirements and things like that.
Yeah, so I would defer to Cora on that, right, as far as the uniformity on that aspect.
Okay, thank you. Any further discussion?
On this particular issue.
Yeah, if not, I want to move on with other questions for Mr. Kurokawa, not necessarily dealing with this issue. Thank you. Any commissioners, any other questions? Oh, okay, any issue now? Okay, thank you, Mr. Kurokawa.
Sure,
Wait.
Oh, okay,
No, no,
yeah,
no.
I,
Wait. Are you dismissing him from all the entire?
No, that's why we need to have him answer questions from all issues.
Yes.
Yeah. Okay, so any questions for any topic now
Yes.
of Mr. Kurokawa, because, you know, his time is valuable, and he just has limited time today, so, yes, Commissioner?
Yes, so I was just wondering if you happen to know, out of the Section 8-10.10 organizations, how many of them are charitable and how many are other types of nonprofits? Do you happen to know that?
No, I don't have that number off the top, but you're referring to the exemptions that we allow, right, for not-for-profits, right? And whether they're 501c3s or
Yes.
not, right? You know, I think there's, you know, there's more than just 501c3s in there,
Right.
I believe, but I don't know the exact number.
Okay, thank you.
Chair.
Commissioner?
Yes, this is Scott Higashi. Earlier we had testimony from the credit unions regarding the notion that their current level of taxation is already sufficient and anything more would be burdensome. Does the administration have a position on the taxation, real property taxation of credit unions?
Well, so, you know, the bill to take away that exemption was heard previously by other commissions, and, you know, at that time, I think, you know, they went from a minimal tax to, I think currently the law says $1,000, I think, yeah. So I think at that time that, you know, we had agreed that, you know, that would have been, you know, it's not a, you know, total nonprofit, but they're not paying, you know, the market value on taxes, right? You know, they reached an agreement that they're not minimal tax. And I think, you know, if all the exemptions maybe, you know, would have probably come up to some other level than the minimal tax, I think that would be our position. We think the credit union is, you know, right now, the leading one, right, as far as what the tax amount that they're paying as regarding all the exemptions that we did have. They're the highest of all of them. Right now, it's them, and everybody else is at the $300 level.
I have a question.
Yes.
Amy Hirano. Gary, tell me something. I asked the question of the credit unions also. When a credit union buys a commercial property that had a building or a commercial business there that was paying commercial real property tax, right? When the credit union moves into that, they then just pay the $1,000 real property tax right now. How many of those conversions have been done? And how many are existing at this point in time?
So, you know, you're saying that, you know, what they're doing is they're owner occupants, right? I guess they buy and they own. So at that point, yes, you know, if the building was being assessed some commercial
That's
rate
right.
to some owner, right? You know,
That's
now
right.
that property becomes, the taxes become exempt until they hit the $1,000 threshold, right? I'm not sure what properties that they own outright and they occupy, right? I do know that, like, you know, a lot of lendings institutions, they might be in some other commercial and just be a tenant as far as that, right? So, you know, when they're in a building like that,
Yeah.
the exemption applies, right?
Right,
Still,
right.
and it goes to the owner. I don't know if the owner is actually taking the exemption and giving it to the credit union directly, or it's being shared, right, by all tenants in the camp.
Okay.
That I don't know, but that to me is like the typical process, right? I don't think they identify and there's other exemptions, right, for nonprofits that occupy, you know, shopping centers or anything that do get the exemption. I don't know if the exemption is applied just directly to their camp. I suspect that it's washed, right, with the rest of the taxes.
Well,
Sorry, go ahead.
no, go ahead.
I'm sorry, one last question. Maybe it's a hypothetical. Suppose you have a financial institution that's not a credit union. Their building that they occupy is assessed by the city at $500,000. What would that financial institution, non-credit union, pay in taxes versus the $1,000?
I would say like about $6,000 if you're saying 500,000.
Yeah,
right?
I'm making that
Yeah.
number up, by
So
the way.
about $6,000.
Okay, thank you.
Commissioner?
One more question. So I don't know if you had a chance to look at the recommendations that we have on the agenda, but does the city have a position on any of these that we've?
You know, I
we're
apologize,
considering?
I haven't not seen the recommendations at all. but I can take a look and make comment, and we can provide comments. I mean, I know you guys are on a deadline, right, to pass out some things, but I can do that, as soon as I,
Actually,
Possibly.
I think that would be very helpful.
Yes,
okay,
Mr. Kurokawa, that would
Sure.
be of assistance to the commission, so we would appreciate that.
okay.
Commissioner?
Mr. Kurokawa, Joy Kimura speaking. I know Commissioner Iwasa had made she filed a request for some information, and she was told that there is a fee that she has to pay in order to receive this information. But since we're all volunteers for this commission, would it be possible to get that fee waived so she can get the information?
Yeah, I would have to take a look specifically at what, it's a 92F request. I'm assuming that, there is some fee that we charge to everybody, but let me see what it is and check with the attorneys about that. But if there is a fee and we're turning over the documents, I'm sure we could look at waiving the fee.
Okay, thank you.
Thank you, Commissioner. Commissioner?
I'm fine.
Okay. Anybody else for Mr. Kurokawa? Thank you for your time, Mr. Kurokawa.
Okay, thank you, and I
Appreciate it.
appreciate all the hard work you guys are doing.
No, I just wanted to make a comment. There was a big newspaper spread and big article in the paper about a credit union, about how much one particular credit union is 1.72 billion in assets. And that they're they're putting in a new branch building. And they're gonna probably pay just $1,000 real property tax, right?
If they own that way, yes. If they're operating as a credit union on their property, yes.
Thank you.
Okay. Well, thank you for all your hard work.
Thank you, Mr.
Yeah.
Kurokawa.
Thank you.
You're not gonna run away. You're running away.
I'm going to another meeting, so if you guys have any other questions, just let me know.
Gary, will there be somebody here on our 21st meeting?
Yes, I think Steve is expected to be here. He just couldn't be here today, and so he
Okay.
sent me
Okay.
on his behalf.
Thank you.
Mr. Kurokawa, can you anticipate Mr. Young forwarding you
Yes. You can-
issues for comments?
Yes.
And you can give it to him,
Okay.
and he'll circulate it to
Okay,
us.
sure,
Yeah, thank you.
sure.
Bye, Gary.
Bye-bye.
So I take it there's not going to be a recommendation, or there is a recommendation by the committee on the income methodology, but no recommendation to amend the ordinance?
Yes.
Okay, thank you. So we're going to move on to the next topic now.
Oh, wait, are we still on recommendations for the valuation committee?
We're
'Cause
moving on to the next topic on that.
Oh, on that one, okay.
So I'm going to ask Scott Higashi to take over while I need to take care of business.
I hope everything comes out okay. So, Chair Yuasa, if you could go on with the Marshall and Swift valuation, procurement and implementation by the city.
Okay, Natalie Wassa. So the one item that we were granted to, that we would be allowed to have access to is the Marshall and Swift contract, which is the item that the city said that they wanted to charge for us. And so, at this point, the committee didn't really have any recommendations specifically related to that because we just don't have enough information at this time. Hopefully, if we get something, I will share that with the committee members, and then we can, provide any recommendation if we just feel that that's appropriate.
Thank you. And the next item would be Bill 49 and the cap on assessed real property values.
Thank you, Natalie Wassa again. So we did talk about Bill 49. Bill 49 would put a cap. I think it was pretty low in the bill, but we did discuss it in committee, and we felt that regardless of the limit, that it wasn't appropriate to put a cap on any assessed values, because that is the one way we can tell across the board how much all of our properties are valued at, and then from there, we have exemptions or credits or that type of thing. So we felt it wasn't appropriate to have a cap.
Thank you. And item transparency of the valuation process and informing the public about this process.
So, yes, thank you, Natalie Wassa again. As I stated earlier, our main concern was that the whole valuation process itself is not very transparent, and I did hear from some community members as well, when this agenda came out, that they felt that they had to go through the appeals process to actually understand what was being done with their property. And so our committee was very concerned about transparency, and that is why we are recommending that the city include certain information on the website so that people can understand when they get their assessment, how the value was arrived at, and then they can go from there.
Thank you. Do any commissioners have any questions about these recommendations? Okay. And we'll move on to the Classifications and Rates Committee. First topic is taxing TVUs at the higher hotel and resort rates, and I believe Commissioner Panaz, you've already stated what the commission, Commissioner Kimura, excuse me. See, that's why I'm not the chair. Yeah.
Joy Kimura speaking. The committee recommends that the TBUs be taxed at the higher hotel and resort rate. As for residential A, we don't have any recommendations. We're just going to leave it as is.
Thank you. Do any commissioners have any questions?
Natalie Wassa. So I was the one who had brought up the issue of residential A, and ever since this classification has come out, there have been concerns that there are people who have, for example, children who are grown. They're trying to save their homes for them when they have children of their own, and so because now they're using them for rental, so they can keep it in their name, those properties are being taxed at a much higher rate at 10.5, whereas the regular assessment is 3.5 for 10.5 for amounts over $1 million. And so what I have discussed at City Council a number of times, and what I would like to see us do here, is to recommend that $1 million threshold be increased. And at one point, the city administration stated that 80% of the taxes for residential A come from properties that are 3 million or above. So, I just feel that it would be fairer, since a lot of these properties are being occupied by renters, people who live here, to have that value increase so that their landlords don't end up passing that increased tax on to the tenants.
Oh, so what is the will of the commission on the recommendation?
So I would like to propose that the commission support asking the council to increase the minimum, the $1 million threshold.
Any discussion? Yes,
Mr.
Commissioner.
Chair, this is Scott Higashi. I mean, I empathize with what Commissioner Iwasa is saying. On the other hand, the testimony that we took did not create the most empathetic situation for the commission to consider. I mean, the reality is the property owners who I think have, a rightful grievance with the residential A classification and the fact that property taxes have gone up do have in all cases I recall in testimony anyway, have the opportunity to either increase rent or somehow recoup some or all of the increase in property tax rates. So I think it's a sensitive issue, but they do have different flexibilities and economic circumstances than a property owner who's only being taxed at their primary residence level. So I don't think we have enough information yet, other than the dissatisfaction with it, to change residential A. I think it's an issue that came up at the last commission as well. So I think it's going to be worth looking at, but I don't know that we have yet enough information to cause a different recommendation other than to take it up another time.
Yeah, Chair. Earl Menti again. As I stated, I'm with the Board of Realtors. We were trying to look into this to try to get data because, we don't want to be subjective. We want to be objective if we're going to change something. I think this was a subjective at $1 million because it just sounded good. That doesn't mean it's a good threshold. The feedback I got was the difficulty when they researched income level of the residents was they couldn't segregate out what the owner's income was. There were a lot of tenants in there that they could get income for the resident, but was not the owner. So they were trying to get more information on, hey, what is the income level of the owner of property that's residential A, and, you know, where is it middle income, and where does it start to get high income? And yeah, they couldn't get a clear indication of that. They're still looking at it, though, seeing if they can clean up the data on that.
Thank you,
Amy
Commissioner.
Hirano, I believe the council is also looking at it and will continue to discuss it in their budget committee. So, you know, we're just,
Okay, so what is the will of the commission then on this recommendation?
Well, the committee recommended that it be left as is.
Okay. Is that the consensus then of the commission?
Again, Commissioner Earl Mente, I would agree with that. I don't want to change something unless we have hard evidence or factual evidence to change it to something that would definitely be better.
Okay, very good. Let's see, we'll move on now to credits and exemptions. Let's see, let's take since I know members in the audience are waiting for this, let's bring up the credit union exemption issue first. Could the committee present their recommendations?
Chair, as previously discussed, the committee was not able to meet and on this, so our recommendation will be to defer to
The next
the chair.
meeting?
Yeah, or to
Okay.
the next meeting, yep.
All right.
Chair?
Yes.
Natalie Wassa. So I was on the 2011 Advisory Commission, and we did take a very hard look at this. So in order to facilitate the Credits and Exemptions Committee, their work, I will provide some of that information, because what I had done was looked at the members who were served low income to moderate income under credit unions, and then also under banks, as well as other information on credit unions, and I will be happy to forward that to you.
Okay, you'll
Just-
forward it to Commissioner Penaz.
Yes.
Yes, thank you very much. Anything else on credit unions? Thank you. Bill 30, exemption for properties connected to utilizing cold seawater cooling systems. Again, we'll defer that. Thank you. Bill 33, relating to the elimination of the home exemption for homes greater than blank. So we'll defer that as well. Thank you. Bill 3, relating to the increase in the home exemption. Defer that as well. For-profit child care centers, deferral. Historic residential real property dedicated for preservation. Yes, Commissioner?
Amy Hirano, I'm a little concerned about the historical properties. They pay only $300. The legislature just recently passed a bill, and I think it was signed, that they are giving tax credits to the historic homes for renovations that are deemed appropriate for the historic home that they have. They're getting a tax credit now, which means they will also get an increase in valuation in their property. I truly believe that historic homes should pay more than $300, and I would like to propose that they pay $1,000.
Okay. Is that for the committee consideration, or would you like that to be
Well,
considered
we'd
by?
like, it's a discussion at this point
Okay.
in time.
May I have discussion on that point? Yes, Commissioner.
Commissioner Iwasa, I tend to agree that, I understand that there are homes that people want to preserve, but we're at a point where $300 a year is extremely low. And because of the rail, because of additional mandates being put through, that the city resources being stressed, I think that this is something that we need to do, and I would support a recommendation of increasing their tax.
Yes,
Yes,
Commissioner.
Earl Mente, I'm also in support of raising that minimum. As far as the rest of the community goes, or other owners, their valuations are increasing. So
right.
inflationary, they're moving up. When we have a fixed level, they're getting the benefit of just remaining in right now, it's a bigger benefit than it was several years ago.
Right.
So we need to keep up with inflation, and just to be fair with the rest of the owners
That's right.
of property in the county, we should be raising that. That's my opinion. Thank you.
Thank you, Commissioner. Anyone else? wishing to comment? Okay, yes, Commissioner?
Oh,
No?
Scott Higashi, no, I'm supportive of that. I think we took this up at the last former commission. I think it's way too low in relative terms to, just the marketplace.
Okay, is the commission ready to make a recommendation then on that proposal? Okay. Would you like to restate that again before we take a formal vote? Commissioner Hirano.
I propose that this commission recommend that the historic homes real property tax be increased to $1,000.
The minimum tax, yeah. Okay, do I hear any more discussion? Any objections? Motion carried. Recommendation is adopted. Okay, next item, historic commercial real property dedicated for preservation. What's the difference? Oh, this is
So Chair-
commercial.
Yeah, so Chair, this is Matthew Panas. So the idea was that you would capture both residential and commercial.
I see,
So they're
I
two
see.
separate exemptions.
I see. Is that something the commission would like to discuss today?
Well, just one point of clarity. Is the exemption the same right now? Is it what they pay?
Uh,
$300?
I'm unsure of the exact exemption, but I know, according to the document that we received from the city for the Real Property Tax Commission overview, the total gross value of the exemption, I'm just going to look it up here, for residential real estate, which was the previous one, was $4.1 million. For commercial real estate, it's $382,000 and 11 properties that are affected.
Okay. So we're not sure if the minimum is 300 or 1,000 yet. Okay. Can the committee research that?
We can.
Yeah, for a report next time?
Yes.
Thank you. Okay, the next item is the Central Kaka'ako Industrial Zone Limited Development. So we'll defer that. Bill 23, Chinatown properties purchased from the city. Again, deferral. Credits for redevelopment of low-income areas using expanded opportunity zone, low-income designated areas. We'll defer that as well. Accessory dwelling unit property tax exemption incentives similar to Bill 63 of 2018 to encourage development of workforce housing. We'll defer on that. And split ROH Section 8-10.10 in 2, define charitable organizations consistent with 501c3 and all other nonprofit organizations as specifically identified elsewhere. Increase minimum tax to 1,000. We'll defer that as well. Okay.
Chair?
Yes.
May I just, since I did report or write up my suggested proposal, if I may, Natalie Wassa. So basically, the idea behind this is that, all of our nonprofits contribute to society, but unless it's a 501c3, they are allowed to lobby. And I've seen many times, many cases where lobbyists come down and they are influencing legislation, but also what's a little different than a 501c3 is they are allowed to back political candidates. And so, we have a piece of testimony here from Pacific Resource Partnership, which is a prime example, I think, of the lobbying power that is available to these other nonprofits. You may know that they spent, $2-3 million in one campaign alone. And so the question is, basically what this exemption is doing is subsidizing these lobbying efforts. And is that good tax policy? And on a number of occasions, people have testified that they don't think that that's fair. And so that's why I propose this, because, when I initially read charitable and then learned what groups were in that exemption, it doesn't match. And so that's why I brought forth this proposal, and I hope that the committee will take this into consideration when you meet. Thank
Mr.
you.
Chair?
Yes,
Just
Commissioner.
Scott Higashi, I mean, one comment, I think the concern that Commissioner Iwasa is expressing appears, though, to be a concern of federal tax designation and not real property tax benefit, because I think if the federal government deems it to be an acceptable classification, and activities that are deemed acceptable under that classification include lobbying or whatever, that's the basis upon which that organization was formed, I don't think we can use that as a basis upon which to change the property tax, because there's an objection to their activity, but the activity is not necessarily one that is prohibited or otherwise, I mean, it may not be charitable, but it is a permitted activity. And so I would struggle with our ability to overreach and then try to impact or somehow make a statement that says, well, because, there's people who don't like that. And I think that's fair that they may not like it, but I don't think that's necessarily borders into a real property tax issue. I think that's a separate issue of taxation and, a different part of the code, if you will.
Thank you, Commissioner. Yes, Commissioner.
I would be happy to go through and revise what I had recommended then, to provide clearer definitions.
Yeah, you may for consideration, just as a point of information, Commissioner Iwasa, 501c3 organizations can lobby.
Right.
Yeah, okay, they just can't do it on a substantial basis.
Right, it's
But they
insubstantial.
cannot campaign for or against, that's true.
Correct. Mhm.
And again, as Commissioner Higashi mentioned, that's a federal income tax issue.
Great, so
Right.
that's why I'll be happy to go through and
Okay, very good.
restate that.
Okay. Anything else the commissioner would want to discuss at this? Yes, Commissioner
Bill
Huron.
23, we got a bill from the county.
Yes.
It's about the Chinatown. Have you guys read that?
Yes, we have.
Yeah, okay, good. I would like to suggest that this commission support this particular ordinance, and, yeah,
Can you explain why?
Yes.
Commissioner?
I mean, it's for discussion, you guys can, whatever, but I read it, I know what's happening in Chinatown. I support the fact that we're looking at it, the council is looking at it, and I think it has great merit. I think as an advisory commission, we should say, go for it.
Thank you, Commissioner. Any other comments on matters discussed today or any other issue? Yes,
Chairman?
Commissioner.
No, go ahead.
Go ahead, Commissioner.
I just wanted to ask, we have Bill 3 here, but I understand it's now an ordinance already. It's been passed. So should we still comment on that? It's ordinance 19-7 now.
Who asked? Yes, go ahead.
Is that correct, Randall?
Yes, correct.
Oh, yeah, that's the one that gives the seniors money, a little, right, home exemption.
It just increases the home exemption only.
Yeah, it's like 20, yeah.
And 33 is the one that increases they're going to eliminate it, actually, $1.
No, you're right,
over.
it is law, yeah.
Yeah, so
passed it.
maybe we should should we limit the discussion in the future to just Bill 33, since it has not been passed, yeah.
Okay, thank you for that, Commissioner. Commissioner Kimura, you had a question?
I just wanted to make a comment about sorry, I lost my train of thought. The Chinatown zoning. I just wanted to say that it's a good bill. However, it's only limited to Chinatown, and I think it's not fair to just limit the benefits to just one demographic or one area. They should make it a little bit more equitable.
Yeah, I'm
It's a
sorry.
good suggestion.
Commissioner?
Mr. Chair, Scott Higashi, I think taking a look at that in the context of item H on credit exemptions, the Central Kaka'ako Industrial Zone Limited Development, I mean, it's another carve-out, if you will, and I think the city, has over time expressed concerns about the, segregation of neighborhoods. So what makes Kaka'ako different from Chinatown? And then, people come and say, well, Manoa should be preserved in the same way because of its unique character, and then gosh, parts of Kalihi. I mean, I think there's a lot of merit in what's being trying to done, but I think the more tax policy that is centered around individualized neighborhoods, it starts to become unwieldy, because I think you face issues of equity when the next the Kalihi neighborhood board comes in and says, well, I mean, actually what we should be doing is giving us tax credits for these historic properties in our district because they're older. And I just see this, if you look 5 and 10 years down the road, next thing you know, you have bills for all the different neighborhoods on Oahu.
Your
Yes,
Honor,
Commissioner.
this particular ordinance is calling for just consideration for properties that the city obtains, not everybody else.
Yeah, I acknowledge that, but I think without knowing what the inventory of city-owned property is around Oahu, it's difficult to assess the overall impact across
Going forward,
Sure,
yeah,
I don't know,
okay.
I don't know how
Okay.
many properties the city still owns.
Good, well point, okay, well point.
Commissioner?
Joy Kimura speaking. We did discuss this briefly, but we're in the process of gathering more information on this. But we do feel that it's not equitable because it targets a specific tax exemption only to benefit industrial properties in Kaka'ako, whereas there are other businesses in Kaka'ako that are not industrial that do not receive any tax exemption benefits.
And the Credits and Exemption Committee, though, is considering exemptions of a broader nature. Is that correct?
Yes, Chair, Matthew Pinaz, yes. And some of the items on the agenda are targeted on that broad, because I think part of our mandate from the council is to review the equity of the credits and exemptions. And so to that point, we are keeping that in mind.
Okay. Is there any other guidance from the full commission you need to draft your report for next session?
I think we will meet one more time. Sorry, Matthew Pinaz, and I believe at this time we have enough information that if we meet, we should be able to draft something. But if anybody would like to email or be happy to review anything else.
Commissioner?
Joy Kimura speaking. Actually, since it is on the agenda, although we're deferring it, if any of the other commissioners would like to comment on this, we are open for discussion and to hear your viewpoints on these issues.
Commissioner?
Yeah,
Goodbye.
Scott Higashi. I mean, I think on classification of the rates, I think taxing TVUs, I'm supportive of that. I don't think that there's any doubt in my mind there's equity. And then the other thing is on, even though I didn't wait for this, but since I'm sorry the guys from the credit union left, but I didn't find the testimony against raising that to some more economically equitable level to be persuasive. I just don't. I mean, it seems like the membership is much more liberally applied. You can basically. I mean, I think there was an admission. You can, if I live in Oahu, I can join a credit union. Maybe not the Hawaii State Federal Credit Union, but any credit union. And I just find it odd that there's, and I don't know that $1,000 going to something else. So in that example of a $500,000 assessment, so if it goes from $1,000 to $6,000, I guess I'm not seeing how a billion-dollar organization who owns one property out of 10 branches is substantially impaired and will therefore be impairing their members. I guess I'm not making that connection.
Thank you,
Chair.
Commissioner. Anybody
Yeah,
else? Yes.
On that topic, I just wanted to make sure that we're only talking about raising the minimum, right?
Oh, yeah.
Not the maximum.
No.
It's just and it's the same thing with historic homes. It's just a small amount compared to valuation. And I wanted to point out, we're not denying them city services. They're getting the same city services, but paying a lot less for funding that, right?
Oh, no, wait now, Commissioner. On the credit unions, they're already being taxed at $1,000. So
They have the minimum tax of $1,000.
yeah. So the proposal is to tax them as without any exemption.
Oh, without any exemption,
Yeah,
okay.
just to
Wanted make
clarify.
sure. Okay.
Yeah, I mean, if that's the recommendation, I think that it comes time to look at that, because I guess, and I didn't get a chance to ask about the consolidation question. I'm not sure credit unions are financially suffering, therefore they're going to go out of business, or they're just being purchased. And there's a natural consolidation taking place.
Yes, Commissioner.
Joy Kimura speaking. Perhaps instead of rescinding the whole tax exemption, perhaps maybe you could come and maybe have a middle ground, because I do know that, although it wasn't clearly stated, that a lot of the members for credit unions, they join credit unions because they can receive services at a discounted rate rather than go to a bank where they're charged. For example, they can have checking account services which are free to the members, but if you were to go to a financial institution like a bank, you would be charged a service fee to have a checking account or a savings account, depending on what institution you go to. And with the cost of living in Hawaii so high, I know that a lot of members, they choose to be credit union members because every dollar counts, every penny counts. And so we have to keep that in mind as well. I know that any rescinding of their tax exemption will impact their members.
Yes, Commissioner.
As long as we're discussing that, Natalie Wassa, I've been a member of a credit union for over 35 years. I also have accounts at banks here, or a bank. And, one of the key points, I think, from one of the testifiers was that they pay out their earnings and dividends. And he said that the top rate is 1.5%. Well, credit card companies now are paying 2%. And as far as banks and charges, I know there are banks that have free checking. So, I think from what I can see and the work I've done, the research I've done, they're operating basically at the same levels. So I will put together some updated information. I'll share that with the committee.
Thank you, Commissioner.
Oh,
Yes, Commissioner.
Joy Kimura speaking. Commissioner Iwasa, would you be willing to put together something where it's not taking away the whole tax exemption, or?
Natalie Wassa, I will put together information so that the commission as a whole can make a good decision.
Thank you.
Okay, any other discussion, questions? Okay, so we're ready to wrap up this meeting. The next and final meeting of the full commission is scheduled for Thursday, November 21 at 1:30 p.m. At that meeting, the commission will probably approve its recommendations for purposes of inclusion in the final report. I would encourage the committees, if they haven't, to start preparing for our consideration at the next meeting, a more or less final draft of the report. If you're unsure about the position taken or the sense of the commission, just take a position so we can go up or down on it. And then what we'll do, and what we'll probably do, is gather those reports, give it to Mr. Young. Mr. Young will put it in a format that will be, I guess, most helpful to the reader. And so we'll have time to work on that. So please be prepared to discuss the issues then. So I encourage the committees to speak to the members and anyone else for ideas or drafting points. Any information, please, any information or questions that need to be asked of the administration, please contact Randall. And you can CC all of us as well, and he can forward that to Mr. Kurokawa. Yeah. I do have one request, in addition to the issues that we talked about, for Mr. Kurokawa's consideration. And I'd like to ask that you ask Mr. Kurokawa to confirm in writing his response about the income methodology being legitimately being considered on appeal with the assessors, and have that in writing. Thank you very much.
Mr. Chair.
Yes.
I know the valuation committee, we're pretty much done with our recommendations, except for maybe a few things. But would the other committees be able to share their drafts of recommendations? So we
Oh,
could
good.
kind of.
Yes.
Yeah, it'll
Thank you.
go out on mass. So I know what ahead of time when we're going to be discussing.
Thank you, Commissioner.
We should operate as a full commission.
Right, okay.
Not subcommittees
Yeah.
all the time, really and truly. Right?
Okay, so any other announcements, Randall?
I'm glad you landed.
No, I think we're okay with that final meeting. Okay, so commissioners, if there are no objections, then this meeting is adjourned. Thank you very much.